Hello there. So we are continuing with boosting our academics on this series to learn fundamentals of accounting 1, and in this video we'll be focusing on ledgers. So I hope that you've interacted with the previous video on journals. So let us start. For you to create a ledger, you will first of all need to start with a journal. So from journal, that's when you will come to ledgers. And this one I explained in the first chapter, introducing fundamentals of accounting 1. So in summary, a ledger is where you record transactions relating to a specific account. Okay, so what do I mean by this? Let me take an example of this transaction. So before I continue, the ledger accounts that I will be creating, I will be referring them to this question which we did in the previous video on journal entries. Okay, so I hope everyone was able to draw the journal entries from 1st January to 31st January. So for the purposes of not flipping pages all over the video, I have this rough paper whereby I've written all the transactions. So I'll just be referring from here. Okay, so let us take, for instance, the transaction for January 1st. It is debiting cash and crediting capital. And in this transaction, we have two accounts, okay? 1st January, we have two accounts. We have cash account and we have capital account. Okay, so now this is where the aspect of ledger comes in. A journal is a transaction involving two or more accounts, but in ledger you will only focus on, let's say for instance, the transactions, all of them which only involve cash. And then you will create a capital account and you will look at all the transactions which will involve capital account. So now that is the aspect of transactions relating to a specific account. Okay, when we continue with the video, you will understand fully. So before we tackle the question, I would like to emphasize on the format. So how do you draw a ledger account? It is commonly referred to as a T account. The moment you're drawing a T account, someone will know that you're drawing a ledger. Okay, so the title of the account comes on top. So let's say for instance, this will be cash account. Okay, so if you look at the T format, this line divides the account into two sides. So on the left side is the debit side and on the right side is the credit. Okay, so transactions which will involve the cash account on the debit, you will write them on this side, the left side, and vice versa. The transactions which will involve this account on the credit side, you will write them on this side. Okay, so the normal format for people who have drawn ledger accounts, they will always draw it like this. So here you will write the date and the currency. Date and the currency. Okay? So this is the normal format. That's why it's being classified as a T account. But for the people who are getting to familiarize themselves with a ledger account, it will still be the T format. You'll still have the title of the account on top. But now, for the purpose of understanding and building a firm foundation and also neatness, we will divide the debit and the credit side into 3 columns. Okay? So as we divide, okay, now the debit side has 3 columns. What about the credit? Now it also has 3 columns. Now this column will be for the date. This column will be for the particulars, of which I'll explain what the particulars are, and then the currency. Same to the credit side. Okay, so if you look at these two, they are still the same. Okay, but now since this one has more lines, now this middle line separating the debit and the credit side should be double lined. Okay, this one is not neat. So disclaimer, the moment you're doing an exam and you're drawing a ledger, please use a ruler. So this format is normally drawn by people in exam because it doesn't have much ruling, because you'll need to save on time. But for neatness and maybe something official, please use this format. Okay? Yeah. So let's dive into the question. So I will be referring to this. So before we even start opening accounts, we need to know which accounts are we opening. Okay? So let us list them down. Accounts to open. Okay? So, of course, cash account is the first one that we need to open. Cash account. There's no need of me writing account. We also have capital account. Cash account, capital account. We also have rent in advance. Rent in advance account. Cash, we've already noted it. Office equipment. Cash, we've noted it. Office supplies. Accounts payable. Cash, we've written it. Revenue. Accounts payable, you have written it. Cash also. Accounts receivable. Revenue, we've written it. Drawings. Cash, we've written it. Also, now the last one is secretary's salary. So how many accounts will we be opening? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 accounts. So without wasting time, let us open the first one. So let us start with cash account. I already pre-drew this neatly just to show you how you should draw the ledger when it comes to an exam. So the title comes on top, cash account. So January 1st, in this transaction, cash is being involved on the debit. So we will write this transaction on the debit side. So we start with the date. Let me write the titles. Currency. Awesome. So the date, 1st January 2026. Okay. What are we writing here in the particulars? What we are writing is the corresponding. Okay. We are writing the corresponding account, and I will explain it. Okay. Capital, and the amount is 400,000. So we are writing the corresponding so that we are able to explain why this 400,000 is being written on the debit side on the cash account. Okay. So why is it being written? It is being written because money came in to the account, cash account, 400,000 through capital. Okay. So why am I saying coming in? Do we recall? Cash is an asset. The moment an asset has a positive change, or rather it is increasing, we debit. Okay. So when cash increases, we just recognize it as cash coming into the business. Okay. So how do you read this transaction in a ledger account? On 1st January 2026, money came in 400,000 in form of cash because of capital. Okay. Now this particulars just shows us why this money came. So in the debit side, it's money coming in. And on the credit side, it's the opposite. Money coming? Yes, money coming. Money going out, rather. Yeah. So let us go to the second transaction. It is involving cash, but on the credit side. So we'll write this transaction on the credit side. 2nd January 2026. So we are writing the corresponding account, which is rent in advance. The amount is 24,000. Yeah. So how do we read this? We say that on 2nd January 2026, 24,000 went out of the business to pay rent in advance. Okay. Do you see how we read transactions in a ledger? Now that is why we write the corresponding account. Okay. We write the corresponding account so that we are able to explain why, for example, this money came in and it is because of capital. And we can also explain why this money went out of the business. And in this case, it's because we paid rent in advance. Okay. So let us continue. January 3rd. This transaction involves cash also on the credit side. So we write the date, 3rd January 2026. The corresponding account, office equipment. What's the amount? 30,000. Okay. How do you read this? On 3rd January 2026, 30,000 shillings in form of cash went out of the business to purchase office equipment. January 5th, this transaction doesn't involve cash, so we go to the next one. Okay? So if you look at how I am doing it from the start date till the end. I am not just picking transactions from anywhere. I'm going on a systematic manner. Okay? So January 9, it involves cash on the debit side. So 9th January 2026, corresponding account, it is revenue 66,000. So on 9th January 2026, 66,000 came into the business in form of revenue. Great. 14th January, yes, there's a transaction involving cash on the credit side. So 14th January 2026, the corresponding accounts payable, the amount is 3,000. So how do you read this? On 14th January 2026, 3,000 went out of the business to pay accounts payable, or rather creditors. Okay, I said that the other name for accounts payable is creditors, and the other name for accounts receivable is debtors. Okay, so we are done with 14th. We go to 16th. 16th doesn't involve cash, so we leave it. We go to the next one. 23rd January, it involves cash on the credit. So we record 23rd January 2026. The corresponding account, drawings. The amount 10,000. How do you read this? On 23rd January 2026, 10,000 went out of the business in form of drawings. Okay? Yeah, we move to the other transaction. January 30th, it also involves cash on the debit. So we write it on this side. 30th January 2026. The corresponding account, accounts receivable. What amount? 15,000. How do you read this? On 30th January 2026, money, 15,000 in form of cash came into the business in form of accounts receivable. Now this is a debtor who is paying us. Now to the last transaction involving cash on the credit side. So we write it on this side. 31st January 2026. The corresponding account, secretary's salary. The amount 20,000. So we are done recording these transactions in our ledger account, and the specific ledger account which we've drawn is cash account. Okay, so what next? Because we've already recorded. Now these are the transactions which involved cash in the whole of January. So in order for us to know the balance which we have in form of cash, what we do is we add these amounts on the debit side and we add these amounts on the credit side. So I did the calculations up front, and maybe you can pause the video and just calculate and you confirm with my values. Okay, so on the debit side, I got 481,000. Okay, so on the debit side is 481,000. 481,000. And on the credit side, I got 87,000. Okay, so here we have 481,000, and on this other side we have 87. So it means that this side has less amount as compared to the debit side. So the balance between these sides is the difference between these sides is the balance. So if we subtract it by 87,000, we get 394. Okay, so this 394, if we add this 394 onto the credit side, then the debit and the credit side will balance. Am I right? Yes. So we add 394,000 on this side, and we recognize this as balance carried down. So C stroke D represents carried down. So balance carried down is 394,000, and this is the balance. So if we now equate both areas, and if you look at me, the equal sign that I want to write the answer is on the same level. I have not written this line up here. It's because all the balances which are balancing together, you write it on the same line. So if I add all of this, I will get 481,000. And on this side, 481,000. So the moment these two figures are the same, it means that the debit and the credit side have balanced, and you close the books. How do we close books? We do a double line. That is how we close. We draw a double line. So the moment you see these double lines, you can say that now the transactions for January are done. So we are ready to go to the next month. But now a question may ask, if you are going on to the month of February, how much in form of cash are you transiting to February with? Okay. Of course, we know we are transiting with 394,000. So this 394,000, we write it on this side. Okay. The moment balance carried down is, okay, in this case, the balance carried down is on the credit side. Now, the moment we are writing that balance, which we will use for the month of February, we take this figure and we write it on the opposite end. Okay? If this balance carried down was on this side, us transiting to the other month, we will write that figure on the opposite end. Okay? So please take note of that. So this figure, I will bring it down here, 394,000, and I will write it as balance, not carried down, but brought forward. B stroke F means brought forward. So balance brought forward to February is 394,000. Now, someone may ask me, why are we not placing it here? We are doing the vice versa. So my answer will be, this is accounting. And if you look at it, it makes sense. Okay. This is the money that we have. Okay. And this is the money that we were paying people, or we were paying things. Okay. If you do the math, you can see that this is the money that we had, and these are our expenses. And when we paid, we remained with money. So the business having money is considered as it being on the debit side whenever it is an asset. Okay. So if you look at recall, the moment we are on the positive end when it comes to assets or expenses, the value is always a debit. Okay. So that is how we do a ledger, and this is how we balance a ledger. Okay. The moment you draw a ledger, you first of all need to find the balance, and I have showed you how you find the balance. Then when you find the balance, or rather the difference, that difference, you will add it on to the side which has the least. Okay. In this case, this side had the least. It had 87,000. So you add on to the difference so that you get the same answer on both debit side and the credit side. Then you close the books, and then you bring that balance on to the next month, but on the different side. Okay. So the moment you are done with this ledger account, you can say that the cash account has a debit balance of 394,000. Now that is the language for accounting. The moment you tell someone that you have a debit balance, you have a debit balance on the cash account, 394,000, it will simply mean that the business has money in cash form. How much money? 394,000. Okay. So I hope you've learned how to create an account, how to look for the difference, how to close a ledger account, and how to bring forward that balance, and to know the balance of that account. Now, you see this balance? This balance is what you will use to create a trial balance. Okay? And that one will be on the next video. So let us do another account, but this time I will do this account like I am. Okay, I will just do it roughly. I won't draw neatly like this, just to show you how we create it, and maybe you can follow through and see if you've understood. So we are opening the next account, which is capital account. So I won't draw these lines. I will use this format, this one. Okay. Capital account. Date and currency. So if I look at our transactions, capital is being involved on 1st January on the credit side. So I'll come on to the credit side and write 1st January 2026. The corresponding account is, now in cash, the corresponding was capital. But here in capital account, the corresponding is cash. Okay. cash 400,000. Okay, so how do we write this? We say that on 1st January 2026, 400,000 was the capital of the business, and this capital came in form of cash. Okay, I hope you've understood. So you can see this observation that on this transaction, 1st January, on the cash account is on the debit, but on the capital account it's on the credit. That is how we stated here. I don't know if you're noticing that observation. Now that is the aspect of double entry. The moment a transaction is made, there will be a double entry. Okay? By double we mean 2. So if these accounts were automated and this transaction was made, there will be a double entry in 2 accounts. The first account being cash on the debit and the second account being capital on the credit. Now that's what we call double entry. Okay? Yeah. So let us look for another transaction which involves capital. Here none, 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 none. Actually, there is no other transaction which involves capital. So here we are done recording the transactions. So what's the next step? We look for the balance. So on the debit side, 0. But on the credit side, it is 400,000. So what do? We add the 400,000 to the list. And the list is the debit side. So we add it. Okay? And we write, this is balance carried down. So the moment you have just one figures and they are the same, there is no need of you summing them up just like we did here. If they are the same and they are on the same line, you just close where they are. Okay? You just close. Someone may ask me, why have I not written this 400,000 down here and just placed a 0 here? It is what we call space automation. There was space right above here. And since there was nothing on the debit side, now there is something, the balance carried down. Okay? Yeah. So since 400,000, 400,000, they are on the same line, we just close. Okay? Now, after closing, now on the month of February, in this case, what are we having as the capital account balance? We know the balance is 400,000. But since when we closed, it is on the debit side, we bring it forward onto the credit side. So balance brought forward. How much? Exactly 400,000. So this aspect of closing the books is just for the purposes of distinguishing that these are transactions from the month of January. Now we are heading to February. What is the balance that we are having? We are having a debit balance on the cash account, 394,000, and we are having a credit balance of 400,000 in our capital account. Okay? Naturally, when we look at our mnemonic, capital, the moment we have a positive change or rather an increase, it is normally a credit. So that is why we are having a credit balance in the capital account. Okay? So we are done with the capital account. So let us head on to rent in advance. You can also pause the video. You see if you will draw the rent in advance account and challenge yourself. So rent in advance. In an exam, kindly use a ruler. This is just for the purposes of demonstrating. So January 1st, there is no transaction involving rent in advance. It's only on the 2nd January and it's on the debit. So 2nd January 2026. The corresponding account is exactly cash. What amount? 24,000. Okay. Are there any other transactions involving rent in advance? Not really. None. So we are done recording. Now it's us to look for the balance. The difference rather. Debit side has 24,000. Credit side has none. So we add the difference, which is 24,000 minus 0 is 24,000. We add it on the side which has less. And which side has less? The credit side. So we add 24,000 and we write it as balance carried down. Since they are on the same line and they are the same amounts, we close. And after closing, now this balance, we bring it forward on the opposite side. And we label it as balance brought forward. Okay, so in rent in advance, we have a debit balance of 24,000. So maybe I challenge you all to create the other accounts, and as we head on to the next video, which will be how to prepare a trial balance, we will confirm our answers together. Okay, so I hope with this video you will be able to create ledger accounts. Okay, and we've seen that for you to draw smoothly a ledger account, you will need journal entries. Okay, so we start from creating a journal and then we move on to ledgers. Now once we create a ledger, now that is where you will be able to create a trial balance. And how do we create a trial balance? Just look at the video that will be after this. So that's it for this video. Kindly don't forget to share with your peers, like and subscribe for more content like this. See you in the next video.